Hey, good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. It's Hump Day, Hump Day, Hump Day. It's Wednesday, April 23rd. We got just two economic news releases scheduled for today, and we'll start off with the market flash PMI. This is manufacturing numbers for the month of April. So we had a 55.5 back in March, and anything above 50 is considered expansion. And for the month of April, it came in at 55.4, so slightly below where we were last month. So unfortunately, the investors were kind of expecting whisper numbers were supposed to be a little bit higher than that. They thought it would be a slight increase versus downward. So that would be a little bit disappointing. We want to obviously keep an eye on that, see if that continues to be a trend. Uh, then we also got the new home sales for the month of March. So February we had 449,000 new home sales, and we figured that increase would go actually up. I'm sorry, that's a typo. It's should be 450,000 for new home sales for the month of March. So again, that was a typo. My apologies. And it came in at 384. So huge off the mark miss there. So it's very disappointing right there. Those numbers are not very good. So as a result, we'll take a look here at the market, and we got stock markets down. So they did not like those numbers. We do got some two big heavyweights coming in for stocks that are releasing their earnings reports later today that could sway it back, make them forget about it, and that's Facebook and the other big heavyweight, not Google, but one of the other ones. My apologies. Those guys will be releasing their earnings reports. Oh, Apple. I'm sorry. It'll be Apple. Releasing their earnings reports later today, and that could sway things one way or the other as well. Also on the news, not playing, but it could play effect in it is the Ukraine tensions. It's getting to the point where it looks like some military action is starting to take place. U.S. is sending some troops over to the borders over there in Eastern Europe in case it rises too much, and this could unfortunately get kind of ugly here. So let's go take a look, see what the bond market's looking like today, and as a result, a lot of that money is being pulled out and going into flight of safety, so it's coming into into the bond market. So while the stock market's down, they put it in the bond market to work the money, and as a result, we're up. The bond market is up, which creates lower interest rates for us. So as you can see, we had kind of a star effect. We were even up further above the 10-day moving average. We pulled back. We've even touched further down, touched the 30-day moving average. It came up, so we create a little bit of this star effect so far this morning. We do have an opening gap as a result this morning, which will get closed. Of course, we still have not closed the gap a few weeks ago. So again, at some point, that will be closing up as well. All right, folks. But so far this morning, rates we got a little bit of a reprieve here. I would certainly, this could be a more emotional knee-jerk reaction here. So if you got anything rates, if you got mortgages in there, I would definitely take advantage of these rates because if anything, we probably will see a little bit more worsening before it gets any better. So if you got anything short-term, I would definitely take it now, lock in today if possible. All right, folks. You guys have a wonderful day. Thanks for watching, and we'll look forward to seeing you guys tomorrow.